Imagine the world's richest voices echoing through newsrooms and conference halls, their excitement for Bitcoin ringing out like a siren song. They call it the greatest financial revolution of our time, a new form of money for a borderless world. Some say it's digital gold. Others call it the foundation of a parallel financial universe. But behind the headlines and the hype, a simple, unsettling question lingers. If Wall Street is buying Bitcoin non-stop, why isn't the price soaring? What are they not telling us? Look at the numbers. As of July 2nd, 2025, Bitcoin trades at a breathtaking $109,242, with a modest 3% uptick from the previous close. Exchange-traded funds, those gleaming institutional gateways, report record-breaking inflows, billions of dollars worth. Yet the chart remains stubbornly flat, oscillating between hope and hesitation. This isn't the runaway bull market many expected. Instead, it's a chess match in slow motion with moves unfolding behind closed doors. So what's really happening? Why is Bitcoin's price stuck in the mud, even as the world's wealthiest investors pile in? To understand, we turn to Tom Lee, a veteran market analyst with a knack for reading between the lines. According to Lee, the answer lies in the nature of those ETF inflows. On the surface, it looks like a tidal wave of fresh cash. In reality, much of it is what insiders call in-kind transfers. Bitcoin that simply moved from private wallets into ETF vaults, not new money entering the market. This distinction is critical. Unlike direct cash purchases, in-kind transfers don't automatically push prices higher. They're a reshuffling of ownership, not a surge in demand. Meanwhile, early investors, the ones who scooped up Bitcoin at $100, $1,000, or $10,000, are taking this opportunity to quietly sell into strength. They're locking in astonishing profits, supplying the market with enough Bitcoin to meet new demand without sparking a price war. It's a delicate dance. ETFs accumulate for their clients, but early holders distribute their coins just as quickly. The result? Price stagnation. But as Tom Lee cautions, don't confuse price stagnation with weakness. This is a quiet accumulation phase. Under the surface, the balance of power is shifting from the pioneers to the institutions, one slow transaction at a time. But why are the ultra-wealthy so interested in Bitcoin in the first place? For answers, we turn to the perspective of Charlie Kirk, who cuts to the heart of the matter. There's only so many penthouses and ranches the rich can buy. They need something scarce, transportable, borderless. In a world where fiat currencies lose value by the day and traditional assets are inflated beyond recognition, Bitcoin offers an escape. A way to store wealth outside the reach of governments, inflation, and capital controls. Think about it. If you're a billionaire, you can only buy so many tangible trophies before your options run out. Real estate is illiquid and easily taxed. Art can be seized. Even gold is heavy and hard to move. But Bitcoin, it's digital, finite, and can be transferred across continents in minutes. For the ultra-wealthy, it's not just a speculative bet. It's the last safe haven in a world awash with uncertainty. But while the rich accumulate quietly, what's happening to regular investors? Many everyday people bought into Bitcoin at the height of the 2021 mania, lured by dreams of easy riches. They watched as the price soared, then crashed, then flatlined. Now they sit on the sidelines, nursing losses or waiting for a miracle. Headlines scream about ETF inflows and institutional adoption, but their portfolios remain stubbornly underwater. Meanwhile, behind the scenes, whales, the deep-pocketed players who move markets, are buying during these boring, dead periods. ETF inflows aren't just numbers on a spreadsheet. They're a sign of silent accumulation. The big money is moving quietly while retail investors grow impatient, distracted by the next shiny object. This is how generational wealth is transferred. Slowly, invisibly, while most people aren't paying attention. Here's the brutal truth. Bull markets don't make everyone rich, only those who understand the rules of the game. It's not enough to buy at the top and hope for a miracle. The winners are the ones who recognize capital cycles, who buy when nobody else is interested, and sell when the world goes mad with greed. Think of it like the stock market. The people who bought the Vietnam index at 500 are the ones celebrating when it hits 1,200, not those who jumped in at the peak because of fear of missing out. The same pattern plays out in every asset class, every cycle. Most people lose because they confuse hype for strategy. They buy when it feels safe and sell when the pain gets too much. So what should smart investors do now, as Bitcoin teeters between stagnation and explosion? First, use idle cash, not your life savings. Bitcoin is volatile, and while the upside is enormous, the risks are real. Never bet the farm on a single investment. Second, embrace the power of dollar-cost averaging. Spread your purchases over weeks or months, smoothing out the wild swings. This approach takes emotion out of the equation and ensures you're not chasing tops or catching falling knives. Third, set clear profit-taking rules in advance. Decide before you buy how much gain is enough, and stick to it. Greed is the enemy of consistent returns. By locking in profit systematically, you avoid the trap of riding the roller coaster all the way back down. Above all, think in decades, not days. Real wealth is built slowly, through patience, discipline, and the willingness to go against the crowd. Bitcoin may well hit $1 million, but that journey will be filled with turbulence, doubt, and temptation. Only those with a long-term mindset will survive the storms. Now, let's confront the ultimate question. Is Bitcoin the path to freedom, or the most elegant trap ever devised for retail investors? On one hand, it promises a future where money is free from government interference, inflation, and arbitrary controls. On the other hand, it's become a playground for whales and institutions, a zero-sum game where the impatient provide liquidity for the patient. The very mechanisms that make Bitcoin revolutionary, scarcity, transparency, portability, can also make it a tool for wealth transfer from the many to the few. So, what's the truth? I believe Bitcoin will hit $1 million. The math is compelling. With only 21 million coins ever to exist, growing institutional demand, and a world hungry for alternatives to fiat money, the potential is staggering. But that doesn't guarantee you'll be richer, unless you act wisely. Ask yourself, do you believe Bitcoin represents financial freedom, or is it a beautifully crafted trap for the unsuspecting? If you had $1 billion, would you put it into Bitcoin today, or would you wait for the next crisis, the next panic, the next opportunity? This isn't just a theoretical debate. It's a challenge to think critically, to question the narratives spun by billionaires and influencers, and to take responsibility for your own financial destiny. So here's my call to action. Subscribe now for weekly truth bombs on crypto, finance, and building passive income. I don't sell hype, I sell clarity. Join a movement of financially literate investors who play smarter, not louder. The future belongs to those who prepare, who learn, who act with conviction when everyone else is asleep at the wheel. Whether Bitcoin becomes the world's reserve currency or the cautionary tale of our era, one thing is certain. The difference between winners and losers won't be luck, but strategy. Will you be ready?